The value of the British pound is feeling the pressure. Recent developments in the UK are causing ripples in the currency market, and it's time to break down what's happening. UK Prime Minister Keir Starmer is advocating for lower interest rates and a decrease in inflation, a move that's currently weighing on the pound sterling (GBP). But what does this mean for your money? During a Monday briefing, Prime Minister Starmer emphasised the importance of curbing inflation to pave the way for lower interest rates, which he believes will stimulate business investment and boost economic growth. He stated, "The most important things that we can do for growth, the most important things that we can do for business is first to drive inflation down so that interest rates come down further, and the cost of business investment comes down with it." These remarks were made in conjunction with praise for the autumn budget, which aims to address the fiscal gap by raising taxes. This is a crucial point to understand, as it sets the stage for potential shifts in the UK's economic landscape. But here's where it gets controversial. The expectation of lower interest rates in the UK isn't exactly a recipe for a stronger pound. Traders are also anticipating the Bank of England, BoE, to cut rates at its upcoming monetary policy meeting, fueled by a weak job market and slowing inflation. However, not everyone agrees. Megan Green, a policymaker, has indicated she'd only support rate cuts if the labour market and consumer spending further deteriorate. This divergence in opinion adds an interesting layer to the situation. Let's look at the numbers. The British pound's performance against major currencies today shows mixed results. Here's a quick snapshot. Currency USD, EUR GBP, JPY CAD, AUD, NZD CHF. USD 0.02%, 0.37%, 0.05%, minus 0.07%, 0.17%, minus 0.03%. Euro minus 0.03%, 0.33%, 0.02%, minus 0.11%, 0.14%, minus 0.06%. GBP minus 0.02%, 0%, 0.02%, minus 0.12%, 0.13%, minus 0.06%. JPY minus 0.37%, minus 0.33%, minus 0.31%, minus 0.45%, minus 0.21%, minus 0.41%. CAD minus 0.05%, minus 0.02%, minus 0.02%, 0.32%, 0.12%, minus 0.08%. AUD 0.07%, 0.11%, 0.12%, 0.45%, 0.13%, 0.04%. NZD minus 0.17%, minus 0.14%, minus 0.13%, 0.21%, minus 0.12%, minus 0.25%, minus 0.20%. CHF 0.03%, 0.06%, 0.06%, 0.41%, 0.08%, minus 0.04%, 0.2%. The pound was weakest against the Australian dollar. Daily market movers, GBP versus USD. The pound sterling is currently trading around 1.3220 against the US dollar, USD, during the European trading session. The pound sterling to US dollar pair is consolidating, with the US dollar showing some sideways movement after recovering on Monday. This recovery occurred despite weak US ISM Manufacturing Purchasing Managers Index, PMI, data for November. The US dollar index, DXY, which tracks the greenback's value against 6 major currencies, is holding steady around 99.40. And this is the part most people miss. The recent US economic data paints a concerning picture. The factory sector has contracted for 9 consecutive months, and the pace of decline in manufacturing activity was faster than anticipated. The manufacturing PMI came in at 48.2, below the estimates of 48.6 and the previous reading of 48.7. This weakness in the manufacturing sector suggests weak demand, which could lead to further interest rate cuts by the Federal Reserve (Fed). What's next for the US dollar? Traders are increasingly confident that the Fed will cut interest rates again this year. The central bank has already reduced the federal fund rate by 75 basis points, BPS, to 3.75% to 4.00% this year. The CME FedWatch tool indicates an 87.2% chance of a 25 basis point, BPS, rate cut to 3.50% to 3.75% at the December monetary policy meeting. The upcoming ADP employment change and ISM services PMI data for November, scheduled for Wednesday, will be key indicators for the US dollar. The ADP report is expected to show private employers added only 10,000 new workers, significantly down from 42,000 in October. Meanwhile, the ISM services PMI is expected to be lower at 52.1, compared to 52.4 in October. Technical analysis: Pound sterling to US dollar. Pound sterling to US dollar is trading at 1.3211 on the daily chart. The pair is holding above the rising 20-day exponential moving average, EMA, at 1.3187, indicating a short-term bullish bias. The 14-day relative strength index, RSI, is at 51.24, suggesting neutral momentum. A break above the descending trend line, which was at 1.3085, confirms a shift in bias. Dips are expected to be contained, with a pullback towards 1.3085 potentially attracting demand. A daily close below this area could negate the bullish outlook, potentially leading to a deeper retracement towards the 1.3000 level. Economic Indicator Spotlight, ADP employment change. The ADP employment change is a critical measure of private sector employment in the US. It's released by Automatic Data Processing Incorporated, the largest payroll processor in the US. A rise in this indicator typically signals positive consumer spending and economic growth, which is bullish for the US dollar. The next release is scheduled for December 3, 2025, with a consensus of 10,000, significantly lower than the previous reading of 42,000. Controversy and comment hooks. What are your thoughts on the potential impact of lower interest rates on the UK economy? Do you agree with the Prime Minister's approach, or do you have a different perspective on how to tackle inflation and boost economic growth? Share your opinions in the comments below.